One thing I find interesting, and something that I actually said was going to happen, is about a month or two ago when we talked about the home sale numbers from the National Association of Realtors, and they were touting how home prices were still up year over year because that was the January data, which came out in February. So we talked about that about a month and a half ago, somewhere in the middle of February. Well, fast forward to today, the new narrative now, because like I told you guys then, that their narrative would change some way, somehow, in order to try to paint the rosy picture that the housing market is doing fantastic. And here is their latest rosy narrative, okay? They're saying that pending home sales rose 0.8% month to month in February. So they went up less than a percentage point from January to February. You can say, well, Michael, you're always talking about the negative stuff and how bad everything is. I just can't take it anymore. And let's hear something good for a change. Well, okay, if you consider that good news, then take it as good news that pending home sales went up 0.8%. But notice something here. Let's pay attention to a couple of very important points with this. Number one, before, when they were touting how good the housing market is, that they were only using year over year numbers, okay? So they were saying, oh, prices are still up year over year. Closed sales are up, everything is up year over year, right? Well, they can't say that anymore. There's no more year over year, things are great. So they have to do something to twist it into sounding better than it is. And this is the latest thing, that pending home sales are up 0.8%. But that's not the full picture. And they're not exactly hiding the other side of the story here, which we'll get into, but they're definitely not making it headline news either, because there's a breakdown of where all these pending home sales are happening and where they're not happening. And most notably in the western half of the country, like we talked about earlier in the week, that area of the country and the market overall is suffering far more than the eastern half of the country. Things are doing so much better on the eastern half when it comes to the housing market than in the western half. In fact, the western US was the only part of the country that actually still has negative year over year pending home sales. It's down by 2.4% month over month. But all the other regions, the South, the Midwest, and the Northeast are up, okay, month to month. But the part that they don't put in the headline news is even though pending home sales are up in all of the other areas of the country, they're also still way down year over year. Well, what happened to the year over year figures, National Association of Realtors? How come you guys aren't using the year over year figures anymore for your headlines? Anybody have any guesses towards that? I would love to hear your thoughts, okay? My guess, they don't want the first thing that people see, because a lot of people only read the headlines that pending home sales are way down year over year. Now, you think 0.8% is a big improvement? Everybody that wants the good news? Well, here's the bad news. In the Northeast, pending home sales are down 17% year over year. In the Midwest, pending home sales are down 16.5% year over year. In the southern United States, pending home sales are down 21.7% year over year. And the only place that's worse than that is the western half of the United States, that's actually down 28.4% year over year. The amount of pending sales, guys. So that is horrific. If you're the National Association of Realtors, you don't want to see that. And let's not forget that these are just pending home sales. These are not closed sales, and we don't know how many of these are going to turn into closed sales, which requires the buyer making it all the way through the contract period and assuming they're able to get financing for the property and actually close, okay? So how many of those pending home sales are actually going to turn into closed sales? We'll find out, but the numbers aren't looking good, guys, in terms of how many pending home sales there are. That's why when you see headlines like, oh, pending home sales are up month over month, or you see a headline that says mortgage rates just dropped for, you know, the fourth week in a row or whatever it is, because now they're like 6.3% or something like that. And when you see that, you cannot be fooled by these headlines thinking that this means a recovery has taken place and everything is bottomed out and it's already on the way back up. Because if you read these stories from the National Association of Realtors, that's what the chief economist, Lawrence Yun, is saying in these articles, saying that things have bottomed out. Now that mortgage rates are down, everything's going to be in massive recovery mode, which is the biggest lie ever, guys. It just is. He, of all people, knows that's not how these housing cycles work. They all take a very long time to play out. When there's momentum upwards, it goes up for years. When there's momentum downwards, it goes down for years. And we just started the downward momentum about 8 months ago, which means we still have a long ways to go for things to actually be in a real recovery mode. And it's not just me saying this, guys, trying to scare people or talk about bad news because that's how you get the clicks. That's what all the haters say. You know, the reality is this is just what's happening. And I'm telling you guys what's happening. If it were the opposite and everything was great and things were going up exponentially still, I'd be telling everybody the total opposite. Like, yeah, get out there and buy. Take advantage of these low interest rates and, you know, buy an investment property, whatever, you know. Why would I be talking about bad news if everything was great? But we need to face reality, and the reality is things are heading in a downward direction. One way that we can back this up even further is the amount of closed sales that we've seen so far in the first quarter of 2023 is also down substantially. And there's a lot of factors that go into this. Of course, the inventory is still pretty low, which is going to make the amount of closed sales low, but also the mortgage rates, guys. At these prices and mortgage rates, a lot of buyers are just out of the market, whether it's by choice or because they're being pushed out due to unaffordability. Doesn't really matter. But the fact is, these rate hikes are starting to show their cracks in the economy when you look at things like the amount of credit card debt that's going up, and you look at how much the mortgage applications are also down year over year. Now with this recent banking crisis that really hasn't even been felt throughout the system yet. So we could end up seeing this phenomenon for this spring real estate season where there is no spring real estate season, meaning that maybe we don't see this huge uptick in inventory and sales and things like that because there's no motivation from either side. You know, the buyers don't have motivation to go out there and, you know, buy because they just can't afford it with these rates and the prices where they're at, and they're getting crushed from all other sides of the economy in terms of what they have to spend to pay their bills now. And a lot of the sellers that have a good locked-in interest rate don't have a motivation to sell either, because where are they going to go? You know, wherever they go next is going to end up costing them double than what they're paying now. Right now, we just have this standstill. The typical spring buying season that we normally see might not even be enough to fix it. We don't know yet because it's still too soon to tell. But over the next few months, by the time summer comes, we'll be getting a very clear picture of where the market's going to be headed for the second half of this year. Like last year, things were so easy to predict, guys, because we saw the Fed start with their first interest rate hike at the beginning of 2022 and then just continue to do that throughout the year, and we knew that was going to happen. So it was easy to see where mortgage rates were going to go and what was going to happen to closed sales and inventory and everything like that. But now, since there's all these uncertainties of what's going to happen next, is the Fed going to continue with rate hikes? Are there going to be more bank failures and things like this? It's getting a lot more dicey to figure out where things are going to go. So what's probably going to happen is this year, everything is going to ride on where mortgage rates go. But honestly, I think it doesn't matter, guys. You know, we see it going down a little bit. That's probably going to be temporary, and we see a small uptick in the amount of mortgage applications. But keep in mind that those are exactly that. They're just applications. That doesn't mean the people will be approved, because maybe they won't have good enough credit or good enough debt to income ratio, which is probably going to be the biggest concern for a lot of people moving into a mortgage application right now. You know, people have $1,000 a month car payments and spending on the credit card like there's no tomorrow. The chances of getting approved for a mortgage under those circumstances aren't so good. And one thing we learned from this super hot housing market is that low interest rates are great for everyone, and because what did it do? It allowed buyers to qualify for more house, which allowed them to spend more money. And it was great for sellers, because sellers could charge all-time high prices for their homes and get people to actually pay. But now that mortgage rates are sitting still in the low sixes, and that's for the most well-qualified borrowers, once again, that's not incentivizing enough to get people out there to buy at these prices. And I think that the Fed is going to continue with their interest rate hikes at least a couple more times this year before even thinking about putting a pause on things. And all of that's likely to make the mortgage rates go higher. And it also puts these buyers out there that are rushing out to apply for a mortgage when they drop just a tiny little bit like this. Like, first of all, how much money is that saving you? Probably less than $100 a month. Whoopity-doo, first of all. But second of all, what are you gonna buy, guys? Because a lot of areas still have pretty low inventory. Is a 6.3% mortgage rate gonna be enough to get you out there and buy a house at, you know, a $700,000 price point, and or get into a bidding war with another buyer and lock in that rate? Like we talked about the other day, you have rich baby boomers that have had a lifetime to accumulate wealth at this point, that might be out there willing to do that for one reason or another, either out of necessity or greed or ego or whatever their motivations are. But you're probably not going to be seeing people my age or younger do this, because they just don't have the capital to do it. And life is already so expensive. You know, half of them are living off their parents still. They can't go out and afford to pay these prices at these rates. I think 2023 so far is shaping up to be the strangest housing market that we've seen in a long time. And it's really impossible to predict where it's going to go because of all these uncertainties. But putting all that aside, let's talk about something a little bit funny regarding the real estate business here. I saw this story today from the Florida Realtors website. I get these emails every day, guys, that talk about different things with the real estate business. And this one is a complete joke. And it's talking about how if you want to sell luxury real estate, which maybe we could say a house like that over there is luxury real estate. You know, you got a brand new home right there that's on the bay, probably $5-6 million home. That's luxury real estate, okay? And if you want to sell properties like that, then you need to look and act rich, even if you're broke, as a real estate agent. And I heard this before. This is not really news, but it's funny to see a story like this at a time when people can't even pay their bills, specifically real estate agents, because we talked about that too, how like 60% of real estate agents can't even afford to pay their rent right now, let alone look fake rich in order to sell luxury real estate. I mean, that's a huge joke to me, guys. This is what it says in this story, and this is how superficial that people and the real estate business has become. Listen to this. If you have a high-end client and driving a 9-year-old Toyota Corolla to meet a multimillionaire at the airport, might not project the right image for yourself. Agents who spend more on their wardrobe and their car to look fake rich, essentially, have more earning potential than agents who don't do that. Now you can easily see how someone like myself that's walking around here casually in this neighborhood wearing a tank top every time you guys see me, unless it's colder outside, could care less about that crap, okay? and I never cared about that, and never cared about working with luxury clients. Sure, maybe I lost a lot of money, whatever, but I've never been the kind of person that's going to completely go into debt, flip my life upside down in order to impress some rich a-hole to hopefully buy something from me. I mean, do you guys realize how absurd and ridiculous that sounds? And this is the advice that they're giving people straight from the Realtor Association, guys. And I think it's sad, especially because new agents are going to eat this stuff up. And when you're coming from a traditional job of sitting behind a desk or working at a factory, whatever they were doing before, for me it was I used to work at a restaurant before I was a real estate agent. Working as an agent can feel like a glamorous job, right? You're out in the field all day, you go to the office and you don't really have a boss telling you what to do 24/7. Your earning potential is unlimited with the commissions, and it can feel like a high-powered position compared to what you were doing before, right? And don't get me wrong, some people make that a reality. They do the fake rich thing and they get in with the right people and they make it all happen and become rich themselves. That does happen. But you have to understand something with this. Just like anything else in life, that only happens to the very lucky few. There's an element of luck in it, and there's also the element of your social ability, because looking the fake rich part is only half the story. You still got to meet these rich people and make them like you and make them want to use you over the other 100,000 real estate agents that live in the area. I think it's just sad that it's coming down to things being that superficial for people to try and earn a living in real estate. And just like anything else, even with YouTube, guys, look how many YouTube channels make it, so to speak, to anything sort of substantial, right? Not that many, because most people don't have the willpower to keep pushing when you're not getting the results. And real estate is a very similar story, because you need to work for months on end a lot of times with no commission. And when you're trying to live the fake rich lifestyle under those circumstances, it's a recipe for disaster for a lot of people, because they'll look fake rich and be spending all this money that they probably don't have, borrowing, going into debt, and then if it doesn't work and they don't make the type of commissions that they need to support their now luxurious lifestyle, they're screwed. They're going to be done. If you're someone out there looking at getting into the business, don't fall for it, guys. You got to start somewhere. I say start with the regular Joes, make some money, have some money saved, have your own house, have some real assets, and then think about maybe getting into the luxury side of things once you're comfortable enough. Real estate's just like any other business where you have to grow the business. It needs to be nurtured from seed to becoming a tree. You can't just plant a tree and now you're a tree. It doesn't work like that unless you're already rich and you can just afford to do that. But I can tell you right now, most agents are not rich. Now here's a house that's for rent, and they're asking just under $5,000 a month, but they started off asking a little too much at $5,900, 3-bedroom, 2-bath. And honestly, I'm surprised they haven't rented it yet, because it's been for rent since December of 2022. And for a 3-bedroom in this area, this is not actually a terrible price, but that just goes to show you how much things are slowing down and how many people can actually afford a $5,000 a month rent. Now, going back to the beginning of this video, when we were talking about this false recovery in the housing market, another thing to watch out for is this false recovery with the stock market. Because every time you see one of these short-term rallies, a lot of people get excited and thinking that the stock market has also bottomed out. Believe me, guys, I am no expert in the stock market, but I'm covering this because the two things are very related, in the sense that big-time investors in the stock market are looking at what's going on right now, and they're looking at what the Fed's going to do next, of course. And the problem is there was a lot of talk that they were going to pause over this last meeting here in March and not do a rate hike, when in fact they went ahead with their 25 basis point rate hike. Now that we have a new wild card in the equation in the form of these bank failures, effects from the banking system have not been felt yet, and they likely won't be felt until later on this year. And since everything is already on pretty shaky ground and there could be more financial consequences to the entire system later this year, this is not giving the greatest outlook for the stock market either. And that's why I keep telling people, like, look out for these things, guys. Watch what they do, not what they say. The jobs reports continually come in hotter and higher than the Fed wants or expects them to. And when that happens, they're very likely to continue with their interest rate hikes throughout the year, like I've been saying and like I predict that they're going to do. I'm not certain, you can't be certain about anything today, but I feel like that's the more probable direction that they're going to go with things. And there's still huge problems with the banking, especially in the commercial sector, because check this out. Banks hold about $3 trillion of commercial real estate loans, and the amount of foreclosures that have been happening with these commercial loans has been skyrocketing. And as that continues to happen, these banks are going to get further and further into trouble and have more liquidity issues that just haven't been realized yet. And I'm not saying that everything's going to melt down and the entire system's going to collapse, guys. I think that's possible, but I don't think that's going to happen. But what I do think is all of these things are signs that we are not even out of the first inning of this recession or the housing market crash or the stock market crash or whatever else that we're going to see happen from this, the credit crunch. It's all just getting started. It's a very long-term cycle that's going to take years to play out until there is any sort of recovery. So the main thing I'm trying to get across here in today's video is don't just read the headlines, guys. You see the headlines that talk about the stock market going back up or the housing market recovering or pending sales up 0.8% or whatever else you see. Just don't think that that's the end all be all of where everything's going, because all of this is just a narrative to get you to believe something that's not really happening. When you zoom out and you look at the big picture and you start seeing how many other dominoes haven't fallen yet but will, then you can realize that those type of headlines are just flat out lies. If you enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.